A while back, I showed on this YouTube channel my ATT method, which is a concept that is from me, by me, created by me as far as I know, and probably one of the most powerful things I've personally ever found or ever utilized in the markets. Now, I did not talk about how to use ATT intraday in that video, but as time goes on, I'm realizing secrets can't be secrets forever, and everything in the dark comes to the light. Now, I've seen one or two people on the internet trying to showcase how to use intraday ATT, and they are explaining it wrong, and they're also not crediting me or calling it ATT. So today I'm going to walk you through how to actually go about using intraday ATT, some of the specifics about it, how to use it to aid entry, how to use it to aid a directional bias, and how to overall bring more confidence to your trade with the power of ATT. So before we begin, go ahead and drop a like on this video, subscribe, join the Discord down in the description if you want to, and we will get right into it. All right, so 3, 11, 17, 29, 41, 47, 53, and 59. These numbers are the ATT numbers, and these numbers in total kind of are super important when it comes to timing the market while utilizing ATT. So from the last video, if you watched the last video, you would understand that in order for ATT to be applied to anything, it needs to be some sort of time segment that you could it needs to be some sort of time segment that you could split into 60 pieces, okay? And you could think about this as the container for the ATT method. And by the way, ATT, again, is a term coined by me. It stands for Advanced Time Technique. I know it sounds really cool, very epic, but that's just the name that I decided for it. It's a little bit cringe, but Advanced Time Technique sounds cool, so that's what I went ahead and went for. So again, you need some sort of time span that can be split up into 60 parts for ATT to be applicable, right? So it just so happens that there's 60 minutes in an hour, right? Everybody knows that. Very simple. Hopefully everybody knows that. If you don't know that, then, that's not all too good. So these numbers, these ATT numbers, will correspond to a particular minute within the hour candle. So we're talking about the 3rd minute, the 11th minute, the 17th minute, the 29th minute, the 41st minute, the 47th minute, the 53rd minute, and the 59th minute. So at these particular minute marks within an hourly section of price, this is where you're very likely to see swing highs or swing lows form in the market. And ATT on its own is extremely powerful, but if you use ATT with things like high time frame levels or whatever type of levels that you individually use in whatever trading system that you use, support, resistance, if it be pinpoint levels, whatever the hell you use, ATT is going to allow you to be much more confident in that, because at these particular minute marks, especially when using it intraday, it is highly likely that highs or lows are going to form. In fact, highs or lows don't form at these numbers only about 20% of the time. It's quite rare for ATT to do nothing. So let's go ahead and take an example here. All right, so as most people here do trade futures, they do trade stock index futures. I want to start this by saying, if you want ATT to be as accurate as possible, you're going to want to really focus in on only using ATT when the market is open. Okay, so you don't want to be using ATT before the market opens. It will work. It'll just be a little bit less probable to actually form the swing points that you're looking for. And also, you want to wait till the start of a new hour. So the futures market opens at 5:30, at least the stock index futures market opens at 5:30. You're going to want to wait till 6 a.m., which is right here, in order to start actually utilizing ATT. And the reason for this is just the start of a new 60-minute kind of time window, a new 60-minute box where things could be kind of divided into. So it's not that you can't use ATT before that. It's just, again, it's going to be less optimal. You're really going to want to start using ATT 30 minutes after the market opens at the time of a very new hour. Same thing if you're trading something like Bitcoin or Forex, where there isn't a particular market open. You're always going to want to start your ATT at the beginning of a new hour, not in between. So you don't want to start looking at it. So you don't want to start looking at ATT at 6:30 a.m. or 5:27 p.m. You want to start your ATT and you want to start looking at ATT at the start of a new 60-minute box that can be divisible. So that means at the start and the very beginning of a new hour. So let's go ahead and go through this right now. So it's as simple as this, and I'm going to be using these little dots to showcase. See how if we come along, this is 6:03 a.m. 6:03 a.m. just happens to be the ATT number. And notice how at 6:03, which corresponds to this 3 right here, the market creates a low and pushes higher. Okay, so one thing you should also know about ATT here is that ATT can form 1 minute before or 1 minute after. ATT could form a higher low 1 minute before or 1 minute after as well. So it's not exactly specific. We'll talk about ways to kind of predict if it's going to form a minute before or a minute after in a second. But we want to go through these numbers first. So now we've marked out 3, which is this dot here. And again, we're doing this by taking the minute and the hour. This is why you want to start from a new hour. So this is 6:03. Now let's go over to 6:11, which ends up being right here, which in this case just played from 6:10. Remember, like I said, it could play at least 1 candle before or 1 candle after. Generally speaking, though, it's more often than not going to play on the exact candle, but it can play 1 before or 1 after. So here we go. This is the 11 ATT playing. We'll just keep it on actual 11, but understand that this could be 10. Then we have 17 here, and notice how 17 is the actual low. So we have 3 being the low, we have 11 being the low, we have 17 being the low. And now notice that this run goes, and 17 to 29 isn't the biggest gap, but notice where this actually comes down into, okay? So this is the 29 ATT. Notice how this is the only big retracement in this run up. So this is something that could happen with ATT. It doesn't necessarily need to form an actual low. ATT can be one of 3 different things. So ATT could either be a low or a high, and we've seen examples of that, where in this case it's a low, in this case it's a low, in this case it's a low. We haven't seen an example of a high yet, but we will here shortly, probably, hopefully. Unless ATT all of a sudden just stops working here, but which I'll go through multiple hours of examples just to really showcase this for you. But it's either going to be a low or a high, so these could have just as easily been highs, but in this case they were creating lows, or it's going to be a re-entry type of ATT, which instead of creating an actual low, it's going to do something like this, where in this case it just immediately rebalanced, if you know what that is, or it gave you a way to get into the market on this pullback. But notice how it didn't pull back anywhere else deep until it got to 29 ATT. That's when this thing pulled back into this range. That's when this thing decided to expand. So now we have 41. Okay, notice how 41 gets printed right here, which again I told you it could be 1 off. So 41's still printing lows, which is interesting. And we'll talk about this also in a second. What it means if it's printing lows versus highs. Then we have 47, which gets printed here, which in this case, again, it could be 1 off. Notice how 47 is also printing right on the low. In this case, it was actually kind of off, right? It went lower than the 47 candle. That's fine, okay? It doesn't often happen where you actually miss ATT like this and it goes a candle over the 1 allotted extra limit. But when it does happen, it's not the end of the world, and it also doesn't mean that ATT is not working. Again, part of the ATT is just showing you the likelihood of a swing and a continuation of that move forming. So instead of higher highs and lower lows, like a traditional market structure sense where you would say, well, we're making, like in this case, we're making lower lows, or in this case, we're making lower lows. Sure, but ATT is making lows. So just because we're making lower lows or supposedly starting to break down, if ATT is still making lows, you're still moving up. And that is really another superpower of ATT. It could start to show you and aid you in intraday bias, right? So if ATT is continuously making low after low after low after low, even if the market is making lower lows, you could start to look at these levels. This is a liquidity sweep. This is a liquidity sweep. And you can start to look at it if ATT is continuously printing lows. So this was 47. Now we got 53. 53 prints here. Notice how 53 also creates a low. Okay, it's a small low. But then we could argue, right? If 53 is creating a low, what can we say? Well, we could say that if ATT is still creating lows, even if we dip below this, in a traditional sense, you might say, well, there was a liquidity sweep. This is the market structure shift. There's a fair value gap. Yes, but ATT is still printing lows. So the market's likely to continue going up. And then we have 59, which gets printed here, which could play on 60, one off. And notice how during this entire uptrend, ATT caught every single low. And this is not cherry pick. This is the last day that I actually traded. This is what I'm showing you right now. This is the last day of price action that I traded. I'll show you more price action days and more hours of ATT. And you can use it further on in the session. Make sure that it's only when the market's open, but this first hour of ATT is typically the best. So what have we learned with this first example so far? We've learned about two different types of ATT use. We've learned about a few different types of ATT. We have not seen a dud yet. And again, duds are very rare. And what a dud is like when it doesn't do anything. So imagine we had an ATT print in this candle and it just kept going up and it didn't do anything and never pulled back or nothing. That would be a dud. It didn't do anything. We haven't seen that yet because duds are very rare. We have re-entry ATTs, which are like this, which don't necessarily provide a higher low. These are a little bit more rare than highs or lows. And then we have highs or lows being created. So low, 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 exactly on ATT numbers. What we've also learned here is that when ATT is creating lows, and it's continuously creating lows. So for example, a trade that I took that you'll see a YouTube short of probably very soon was right here. I longed here and got involved with this whole run up. Part of the reason I was so convicted on this run, part of the reason I was so excited about this run up was because ATT was printing lows. This was a liquidity sweep. I knew it was a liquidity sweep before it went up because ATT was printing lows. ATT printed another low, which told me that, hey, we're very likely to continue going up. And I had a high time frame level up here that we closed above. So I was able to get involved with this run. And even if you were trailing here, boom, you could trail after ATT and just let it keep running, for example. Or you could get re-involved on that immediate rebalance, understanding that ATT is still there. Now, it's important to still have targets and things like that in place in the market, because if you don't, ATT alone is extremely powerful, but it cannot be your end-all be-all. I've seen some people try to make ATT on its own and kind of its own trading system, which is okay if you want to do that. But for me, I like to utilize it with a lot of different stuff. And by the way, if you want to learn about that lot of different stuff, you could join the Discord down in the description. There's also Patreon there where I teach everything I know, literally everything that I know. You don't need to join the Patreon, but if you want to just stick around the Discord, you can. I do giveaways all the time and things of that nature for tiers and stuff like that. But with that being said, you do want to have a whole trading strategy. ATT is just something to implement. So again, and we've also learned that you want to start this on a new hour in particular. You do not want to start ATT at 5:30 here, okay? So it's going to be worse. So you'll see like 41 here did nothing, right? 47 did nothing, dud. 53 did nothing, dud, right? That's because it's before the first, like in the first 30 minutes of the market open. ATT is highly, highly, highly unreliable. You want to be using it at the start of the new hour, and then you get very, very clean ATT prints. Another thing that you learn is that if ATT forms underneath a low, this is no longer like a market structure shift. Now, I don't use market structure in my trading. I think it's a very flawed way of looking at the market. You could bait me all you want on this, but that's something that I believe in. I like to use ATT to aid my intraday bias. It's highly, 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 highly reliable, way more reliable than market structure in my opinion. So let's go ahead and look at the day right before this and find a new hour to drop a case study on. All right, so this is going to be an interesting case study. This is the day prior, right? We just looked at the 20th. This is the 19th. The reason this is going to be kind of interesting is because it's a relatively choppy day, right? It's a relatively choppy day. It's generally just not that good looking, to be honest, in general. So remember, the first thing that we want to do is make sure that we're not utilizing ATT in the first 30 minutes of the market. So the market opens at 5:30 for me. We want to wait until 6 to use ATT. So this is a red zone, a no-go zone for ATT. It doesn't mean you can't trade during this time. You can, and I do. It's just that you can't use ATT as a confluence or as anything during this time of the market. At least I would highly, highly, highly recommend against using ATT during this time. Okay, so 6 a.m. starts right here. And let's go through it again. So we have 6:03, this candle right here. And notice that ATT prints a high, right? Because that's what ATT does. ATT prints a high at 603. So ATT prints a high at 603 here. And the market rushes downwards. And then, if you see, we turn this fair value gap inversion, we push down, and when do we trade down into that fair value gap? Well, we trade right down into it on ATT number 11. So this is another example of one of those re-entry ATTs that you could get. This is it creating a high. It would have been nice, for example, if ATT caught the actual low, and sometimes it won't. A lot of times it will. Many times it will, but sometimes it won't. And sometimes it'll show you just a re-entry opportunity. So in this case, it was an inversion fair value gap, if you know what that is. Cool. So ATT gives you a re-entry in order to push up in this move here. And then we have 17, which gets printed right here. This is the 17 candle right here. And again, this is not cherry picked. I'm going day by day. And I urge you to go back in time and back test this on days. You're going to be fucking amazed, because this is probably one of the most accurate, probably the single most accurate timing technique that I've ever seen for the day trading markets, that I've ever seen for stock index futures. It's highly powerful if used correctly, and not like some of the fucking idiots on the internet are trying to portray it out as. And I knew the second that I was going to put out that idea, the second that I was going to start talking about ATT, people were going to start trying to steal it, because it's one of the most powerful concepts I've ever seen in trading. But ATT has helped me make millions of dollars. And hopefully it could make some other people improve their profitability. And this video is just gonna be for free. This is some of the good shit. This is some of the really good shit. I have other stuff in the Patreon, like PDR levels and stuff like that, that are also really good. But ATT, oh man, ATT is something else. So we have 17, okay? And notice how there's a long span before the next one, right? The next one is 29, which is this candle right here. In this case, ATT makes a high on 30. Remember, it can be one off. It's not often one off, but it can be one off. And a lot of times, you could tell if it's going to be one off is by if or if not it's has a high time frame level attached. So if 29 comes here and your high time frame level is up here, you could start to consider, especially if ATT started to create highs like it did here. Well, if ATT created a high, it's likely going to create a high again. Okay, so if you haven't traded up into this high time frame level by an ATT number, well, what that means is that you're likely to potentially push up into that. Now, after the 1 minute window on either side, I would not give credit. Like if a low got created at 31, that is not an ATT low. Again, ATT is very specifically like a 1 minute window, and usually it's the exact candle. Okay, so here we go. This is going to be our 29 ATT. And then notice, right? Market goes down, it pushes up a little bit. What's the next number? The next number is 41, okay? Where's the 41 candle? Right here. What is this? The low before the market starts going up. Right. So you could see, even in relatively choppy conditions, ATT is being highly reliable. And again, backtest this yourself, please. And then where's the next ATT number? 41 to 47. Where's 47? Right on the low. Right on the low. So this would give you, for example, like a perfect pullback entry. Imagine that you had a high time frame level here. Market comes down, it forms ATT. ATT's already been forming a low. Boom, you could get involved with a potential run up. This is the power of ATT. It shows you the likelihood of where these swing points are to form. So here's 47 is next, right? So this is 47. Now we have 53. 53 forms right here. So this is a very interesting example. I'm happy that this example is getting shown here because it's interesting. Okay, so notice how this is the 53 candle. We know that ATT has a 3 candle window to form. So within that 3 candle window, notice how ATT created a low and it created a high that could both be potential ATTs. So what you're going to do in this case is you're going to wait for either or to get broken. And when that gets broken, that's going to be what's telling you that ATT is actually where it should be. So notice the second that this low gets broken here, that means ATT is actually printing a high. Okay, so notice for a second how now ATT has switched to printing highs. Okay, so what does that mean? Well, that means if ATT prints a high above this, we could treat this as a liquidity sweep, and the market's likely going to start rolling over because ATT is starting to print highs. And it just so happens, where does 59 print, right? This was 53. Where does 59 print? 59 prints right here. On 58, which is one before. So notice the second that ATT started to switch highs, and a lot of people would look at this as a market structure shift to continue this upwards trend. They would look at this as a liquidity sweep or whatnot. But for me, ATT switching to printing highs, this is likely to start rolling over, and it does, and it breaks out of the range. And this is a very, very powerful way to use ATT. So again, we saw a few examples of it's creating highs and lows very, very clearly, and this is going to be the most common occurrence of ATT when it's actually just creating highs and lows that you want to see, like so. And then we also seen the re-entry type of ATT. So now we're going to go through one more day's example, and then my talk on intraday ATT will be done. And if you want to learn more and see how I actually implement this into trades, you're going to have to join the Discord. So this day is really interesting. I'm actually going to start this day at 10 a.m. And the reason for this is because there was high impact red folder news on this particular day at 10 a.m. So generally, if there's high impact red folder news, you're going to want to start trading then at either way, but that starts at 10. So we're going to start this ATT at 10 just to show how it works in a very trendy, very volatile type of market. So first off, let's go to 10:03. Okay, 10:03 is right here. Notice how that marks the top of the pullback. In this case, it gets created at 10:02. So for example, let's imagine that you had some sort of high time frame level right here. You believe that the market has room to drop lower for whatever reason that happened up here, and ATT prints, boom. Well, you could be now much more confident. Even though you got this rejection, you could be quite a bit more confident that ATT is probably going to give you some follow through, right? So that's the first ATT number on this particular hour. Now let's fast forward to 11. Which just so happens to be right here. Notice that ATT is still creating highs, right? ATT is still creating highs up until this point. So if we do start to roll over top of this, it's highly likely that this is probably just a liquidity sweep, okay? It's highly likely that this is probably just a liquidity sweep if we do roll over top of that. And ATT is still printing highs. So now let's go over to 17. 17 is right here. Again, this is one of those awkward cases where it creates a high on 17 and it creates a low on 18, but it also creates a low on 16. So that 1 minute window on each side. So we talked about what to do in the scenario. So price broke the low first. So what does that mean? That means ATT created the high. Even though 18, if we were to play it one after, would be more accurate in terms of a swing point, ATT is still creating highs. Why is this so useful? This is so useful because if ATT is still creating highs like it is right here, then it's likely if you run above a high like this, it's probably just going to be a liquidity sweep. So let's imagine that you have a high time frame level right here and you notice that ATT is still printing highs and you run over this. Well, for example, you have this sweep of liquidity above this high, you have a high time frame level. This retest with a stop loss above here can work out. Even though you don't have a particular ATT number, it would be nice if 29 printed up here. That could be a trade that you could take because you could be somewhat confident that because ATT is still printing highs, the overall direction of the market is probably still down. Okay, it's probably still down. And now up next, we have the number of 29, which just so happens to be here. Remember, it could be one off. So in this case, it's right here. In this case, it kind of goes counter trend, which is fine. It's a little bit awkward when this happens, when ATT goes counter trend, but it's something that could happen, you know, and it does. In this case, it pushes up and ATT starts to create lows. This might fool you up for a minute, you know, and this is also part of the reason why it's so important to have bigger targets and bigger expectations for a move. Because if you were just playing off this, you might think, oh, well, ATT is starting to roll over. But if you had a whole narrative, there's high time frame levels, etc., you might understand that this could just be an extended re-entry ATT to push up into an order block or more likely a very high time frame level up here. And then notice how 41, which is the next one, gets created on 40 and creates a high right here. So especially if something like this happens where you create a high, you create a high, you create a low, and then you create a high, this middle one is kind of out of place. So that's kind of showcasing you that this is probably just a re-entry ATT. So if you see, for example, 41 in this case, make a high, you can get rid of the idea that this was creating a new type of trend in the market, but instead, this is just a whole extended re-entry leg. We could look to enter short here and play a continuation down, because even though ATT created a low here, we also created a high right afterwards. Now, if this would have been here and created a low, then you could start to think about this potentially reversing and creating a new trend, so long as you have like a high time frame level or something down here in order to support that narrative and support that idea for the move. So that was 41. Let's look at 47 now. Okay, in this particular case, 47 prints here. Even if you give this one leg of room, it doesn't really do much for you. As you can see, in this very particular case, ATT kind of does nothing. It kind of calls the low, but it does wick down a bit further. I wouldn't call this a dud because it still gives a push up to potentially have a re-entry, but it's leaning on dud. It's kind of dud-ish. And then 53 in this case was definitely a dud. Notice how the previous candle didn't create a higher low, the next candle didn't create a higher low. I think during this whole video, this is the first true ATT dud that we've seen. And now let's go over to 59. 59 happening right here, okay, at 58. Perfect. And there you go. So it continues the trend. So high, we could understand this is a liquidity sweep. Price is still printing down. Low might get you a little bit scared. The next ATT 41 creates a high. Understand that this is an extended re-entry type of ATT play. Drops down, creates another extended re-entry. Dud for the first time. 59 pushes up into the fair value gap, showcasing potentially that we're just going to keep going down because ATT is continuing to create highs. We understand that this is a pullback now that this prints a high. The midpoint of this wick could be played, especially if you have a high time frame at this level, to continue a short down, and that could give you like 10-15 R easy. So ATT, intraday ATT, extremely powerful stuff. One of the most powerful, probably the single most powerful timing method I've ever seen in the markets, bar none, not even close. It is my concept. I created it, as far as I know. Obviously, other people in the world utilize it because it wouldn't work if other people in the world didn't utilize it. I've just never seen anyone on the internet utilize it. I didn't learn this from anybody. I didn't get this from anybody. This is all me, and now it's in your hands as well. Use it wisely, be responsible, use proper risk management, and I'll see you guys in the next video. Again, if you like this video, go ahead and drop a like, a subscription, comment down below what you want next. Join the Discord, join the Patreon, do whatever you want to do, and have fun trading. Goodbye.